policy maker, you have had news, it was successful, 105% oversubscribed. Then you start making about how our market is full of money and companies are being oversubscribed. But then after that, oh, the share, hata haijaanguka vile Wakenya walikuwa wanasema. Si ndio sasa watu watasema? Why? The same company that was the lead transaction advisor was given a role with money to make sure they prop up the shares. Is you aguke below 9 shillings within a month. Now, ask yourself as a CPA, a company listed in the NSC, trades for a month between 9 shillings and 9.08. Just try to think, any company listed in the NSC is oscillating between 9 shillings and 9.08, oscillating around there. And those who work in the financial industry, because I think everyone who is a capital market know. So there is something called propping. So you create an artificial demand for a share and you actually place it in the market. So when people are trading, they realize, hey, there is a block person here wanting to buy shares. So they prop it for a month so that you don't embarrass the person who rang the bell. That they rang the bell and the share collapsed. After 1 month, kibarua iishe. So what I'm trying to say, you dig deeper for information so that you make your decision not based on the superficial you see, but you make your decisions based on the reality. The reality is, for example, take that company with a PE ratio of 22, the highest in Kenya, in any listed company, including Safaricom has a lesser PE ratio of 13. The energy sector has PE ratio of 6 for Kengen, of around 6 for Total Energies, and below 2 for Kenya Power. And then you are told to hold a share here with a P ratio of 22. Why? Make it scarce in the market. Because the retailers are only holding 2%. Let's mop it up a little bit so that there is no supply. And because there is no supply, so we can prop the share to the price we want. So we'll be holding mchanga. You know the way you can be told, shikilia mchanga kwa mkono, it may turn out to be gold when you open up your heart. Are you getting what I'm saying? You know I can create scarcity of sad. I say hakuna mchanga ya white hapa. Wewe shika hii mchanga, tunaona kama itakuwa kwa bei kali. So unaisikiria, unaambiwa kuna time utafungua hivi, kuna mtu atakuja ainunue for 2 million shillings. So superficial decision making. I've used Kenya Pipeline because what I'm talking about is totally true, but also it may end up misleading somebody by reading data coming from government, but which is misleading. So always dig deeper. Let me go now to the real issue so that I sit down. Now I'm not talking about business. I'm neither talking about entrepreneurship. I want to talk about investments, and especially given this time you are in. People bought shares, then they are wondering, hii share itafika wapi sasa? The Dow Jones in the US is yesterday it went down by close to 2%. It has gone down by over close to 10% in one month since February 28. So you are here seated and we are wondering, what do I do now in this kind of time with my money? Of course, here CPS, we are no longer talking about whether you buy plots. That we already talked about in Mombasa. And I don't think anyone of you is buying their 7th plot yet now. I think you're out of that discussion. That's why I'm not going back there. I'm not talking about whether you fix your money in the bank today, because I think you should know better. I'm also not talking about active business, because active business is good. It keeps you active, but it also aids production. And I don't want to delve into that today. I'm a proponent of entrepreneurship and business. Whatever business you're doing, the more you expand it, the better. The more you do business, the better for the economy and for yourself. So I'm not talking about that also today. I want to go direct to investments and our demeanor around this time. The time when the global markets are being rained on. There is a cold that is permeating across all the global markets. What should we do now at such a time? And that's what I want to talk about in a few minutes. First of all, to discount that point, there is no one in this hall or anyone watching us online who has lost money in the NSC and they bought their shares for the last 6 months or 1 year. None has lost. And especially if you did your research to buy and you bought value, no one has lost money. Even the people who bought shares when we were in Mombasa, most of the shares we were talking about there, even after Iran, and even the NSC has been down since 28, those people are still enjoying profits even today. Why? Because our market has been grossly undervalued, including now. So the people who bought shares, let's say 6 months ago, let's say Kengen was maybe 8 months, 12 years ago, 8 months, 12 months ago, Kengen was still around 6-7 shillings. Even after paying dividends, Kengen is still around 9 shillings. But we are saying it has gone down, given where it was a month ago. Equity Bank was still in the 50s, yet it went up to 80, is now around 70. So anyone who bought, they are still enjoying a bigger profit than any other investment you could have done for the last 6 months or 12 months. Take KCB, was in its 50s. Even after paying special dividend and announcing another one, and even after Iran, the share is still in its 70s. Take NCBA, was in its 70s, it's now in its 90s. Take basically any Kenya Power, was in its 14s, is now in around its 16s, after falling a little bit due to Iran. So this is the reason I'm mentioning those things. And I want to refer to this because I want to be methodical. All the time you are doing investments, you can buy land, T-bills, you can fix money. So the argument usually is, you know land you can't lose, and T-bills and fixing money you can't lose. That's usually the argument. But I want us to be sequential here. When you say you can't lose with land, are you dealing with the question of worth, or are you dealing with the question of liquidity? If I have my phone here, which is only one, and there is no other make of this phone other than this one, so I price it the way I want. But if there are a million phones out there, so the phone becomes liquid because there are many more people who can access it. So out of that liquidity, when there is any information about this kind of phone in the market, they get affected immediately because there are many and people are sensitive because of the demand and supply. So let us not confuse, when you are investing, between dealing with a liquidity problem and a value problem. The reason why we purport land doesn't lose is because it's not in the exchange, it's not tradable every day. That land is only exchanged only when you're actually selling it. Remember, in terms of oil and in terms of the other instruments, they are tradable every day. So any information in the market affects them every day based on the perceived information. Now, when you talk about money doesn't lose, fixing money, I think all of you as CPS know that is a fallacy. This is the reason. Now, the world, if there is a recession, for example, so shares collapse when there is a recession. And then what happens? The government, to incentivize the market, they lower interest rates. Please be sequential here. When money is lowered, there is a time US lowered interest rates to 0 in the 2007-2008 financial crisis. What does that mean about your money? It means the yield of your money is 0. So even fixing money also becomes 0. It's no longer paying. And it therefore means the yield of your money gets decimated 100%. If Kenyan interest rate is 8% and it comes to zero, it means the profit you are getting out of your money evaporates to zero. If interest rate moves from 8% to 4%, it means the yield of your money goes down by 50%. That is the reality. Leo sio jokes, ni ma jargons. But I'm hoping tunaenda pamoja. So you are in the financial industry as a bank. So you are making decisions today. You are in a microfinance today, and because you are CPA, you did economics, people are looking up to you. What are the things you are thinking about Iran and your company? Your mind should stretch beyond oil. Your mind should stretch between, even when there is D2G, we still have to pay our fuel. Somehow, we still have to demand dollars. So if a barrel of oil is up 50%, that should be talking to you about the demand for dollars in the next few months in Kenya. It should be talking to you about what the demand for dollar will do to the Kenya shillings versus USD. It should be talking to you about where should your money be now in this kind of demeanor. In which currency should your money be? That should already be speaking to you. Let me come back to the market. So every time there is a disruption, there was one internet bubble in the US around 2000. There was the financial crisis in 2007, 2008. There is Corona time, when the markets in the world collapse, including our own, because we are a global market also, so to say, because we accept also global financial flow into Kenya. So we are here now. This is not even a crash. It is a bump. The world is, yani, kuna mtu anastua markets. So here, because oil is so integral, oil has permeated to New York Stock Exchange, Johannesburg, to South Korea, to Kenya. So we are there now, and we are wondering, where do I invest my money? What do I do? Including me now. So what do I do? I have assets in shares. You have assets in land. I have assets in other things. So what should I do? Number one thing you have not to do, even as you find out what to do, avoid panic sales. You know the way unaona share inashuka, then you are calling the broker, hey, uza kabla ishuke sana. Because you'll actually not be using the degree and the CPA you got in campus. You'll not be using it. You'll actually be discarding it. Avoid panic. And I'll give you some scenarios here. During the internet bubble, mnajua hii kampuni inaitwa Amazon, ya Jeff Bezos. So Amazon was also an internet company. It was a reset of all internet companies. They all collapsed in terms of share price. Some even collapsed literally as companies. So Amazon by that time was valued by the markets at around $37 billion US dollars. So the share price was around $113 of Amazon. As Jeff Bezos was gazing like this in the market, the company was doing fine. There's a difference between the company and the markets. The share price collapsed to $6 from 113. So the valuation of Amazon came down to 1.7 billion US dollars from 37. It was down over 90%. 90%. You know, this looks like far-fetched. We are talking about your 1 million you had put somewhere. Na mtu anza kukwambia iko 60,000. That's what we are talking about. Yani unapigia broker, hiyo kitu yako imekashona iko aje, anakutumia portfolio valuation, which was $1 million shillings, it is reading 65,000. Now, a few, of course, months later, it rebounded. It's the same company we are talking about today, with a valuation of over $2 trillion US dollars today now. Now, if you study many companies, what happened in the 2007-2008 financial crisis, It is replete with those kind of stories. People, you know what makes the share price to collapse? Because there are so many people supplying, but there are no people demanding. It's the same thing that makes the banks run. Bank run is a bank collapse. Is when we go to Equity, to any bank to demand all our savings. But it's our savings which you have lent your brother as a loan. But your brother is not queuing to pay the loan. But you are all queuing to receive the cash. So that's what is called a bank run. Because you are demanding what the bank does not have in liquid. So even in the equities market, we all want to sell. But everyone is fearful. And when everyone is fearful, there is no demand. When there is no demand, and there is a mismatch between supply and demand, supply takes over and the price collapses. Now, we have been a proponent, and I want to request us even today, avoid being a trader. Avoid being a trader. Always be an investor. When you're an investor, you will never care about the share price. You will care about the value. I gave you this example. I'm giving it because it's public information. So the company, the NSE in Kenya collapses like in 2003. After collapsing, the share price of many companies collapsed. There is a time in the last 3 years that KCP shares were trading at around 25. I'm not talking about decades ago. I'm talking about 2 or so years ago. Kengen collapsed to like 3 shillings and 50 cents. Kenya Power was at 1 shillings 80 cents. That is the time you need to apply value investing even better. Why? I've told you there is the company here and there is the market here. So let's put company Kengen, but you also put another company there. You are allowed in Apple. In the same, put another company, that is the investment vehicle. You are allowed in Kamuru, is also part of that. And put Safaricom share. All these are where your money is. Tuende pamoja. Okay, where is our money? Can somebody shout anywhere your money is? Come here. Because I'm almost concluding. Come na kitambu. I want us to put fundamental one side and the market the other side. So in the fundamental we put in draw a line here. Draw a line here like in your book. So on the left side, let's put all where our money is. One person said MMF. Second one, I'm asking about your money. Just shout where your money is. Kenya Power. Another one, Co Bank. No, Co Bank in terms of share or in terms of deposit. Put both. Co Bank as a share and the hapo chini Co Bank as a deposit. So that one can start for all the bank deposits. LAD, put LAD. Put LAD, put SACCO. Put Forex. Forex means you are holding dollars or you are holding euros. Okay. Please mention any other. It is in cows. Wake a cows. Put also avocado. Yes. What else? Yes? Mansa X is still one of the, put it, yes. Crypto. Wake a crypto. ETFs. Mswali. Mattress. So mattress will start for real cash. So let's go sequential. Good people. Gold. Make a gold. Very good. If we had a longer session, we would have seen how and why cryptocurrency is behaving the way it is doing and why the gold is behaving the way it's doing. But hiyo ni homework nitawapea. But there is a correlation of all those things. When you watch CNBC and you understand it, you actually almost preempt what the other one will do when you see only one trigger. Now, MMF shares, LAD, ETC, those are